Hi everyone and welcome back to today's morning report with me, Rich Perry, market analyst at Hantech Markets on Thursday the 22nd of January. I'm going to move on to dollar yen now. This dollar yen chart is interesting actually. I've gone straight to the intraday chart because that is pretty much where all the action is taking place. I said yesterday about this this base pattern that I see is in place. You could equally draw that as a base pattern that goes through a double bottom, slightly double bottom anyways, but I think it's probably more on this sort of head and shoulders reversal type pattern. And that yesterday, interestingly, the support came around the neckline. If you take that as a slanting neckline, the support came pretty much on that. So I thought that was quite an interestingly positive aspect to this chart, because we then saw a rally, although the rally in the last few hours has started to fall away again, back below 118, which suggests yen strengthening. Now, it just seems as though this chart is sort of chopping around a bit in the last few days, and that's pretty much probably to be expected with the fact that it's such a huge FX event potentially going to happen with the ECB on the brink of engaging quantitative easing. So the dollar yen chart has sort of still been a bit choppy, but a little bit of consolidation as well, indecision in terms of where to go. Momentum indicators on the hourly chart are fairly neutral, but I still think that the fact is that we are sort of trading around this neckline area. You could argue that even on the double bottom base pattern, you could argue we're trading around that neckline as well, and so you would argue between sort of 1720 up towards that 75-80 level is a basis of support for this dollar yen chart. So if you take that as a nice band of support, maybe you can start to use it, because if you stay above that 1720 mark, 1715 is pretty much the low in this sequence, or yesterday, then the bulls could start to think about this possible rally, because we have broken this this downtrend that we've been in pretty much since the start of the year. We have sort of broken that downtrend now. We're starting to trade more above it, and also if we can hold on to zoom back in again, if we can hold on to this right hand shoulder, which actually comes in at 16. I think it's 1690 around there. So you could use sort of support that as a stop area, sort of 1690, 1680 area. Potentially, if you did have a nice new low above this in this support band 1720 up towards 1780. So we're still pretty much up in the air as to exactly which way this one's going to go. It looks like it's trying to base out, but again, as I said, the consolidation would suggest that the market is still unsure at the moment, and that is reflected. This is on the daily chart. It's reflected in the trading over the past few months, really, sort of up and down, swaying higher and lower. Momentum indicators pretty much now basically flat and neutral. MACD lines neutral, RSI neutral, stochastics still rising, so that's still fairly positive still for the recovery, but it looks like the shorter moving averages have rolled over, and yes, it's becoming increasingly neutral. But at the moment, as I said on the intraday chart, it looks like it's trying to base out. It's just interesting to see if the reaction today actually allows it to. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.